Hi guys, this is Eugene. Today I just wanted to make a video about how investment is changing and that traditionally things like stocks and property have been the go-to investments for people with some extra money. And I'm not saying those are out of date now, you can still do those, but currently you can leverage the current technology to invest in better investments that are not too risky like crypto. For example, let's say if I wanted to buy a typical one bedroom apartment in Rosebank in Johannesburg, which is a hub for restaurants, nightlife, tourism, lots of Airbnbs there. Whenever I'm in Joburg, I rent apartments just like this in Rosebank. You can see this is like a new build, brand new. It costs 1.1 million, about 37 square meters, and the rates are 979. The levies are 2.7. So this is about 3.7 extra. The monthly repayment would be 10,900, 11,000. So 11,000 plus 3.7. All right. So that's like 14.7. You'd have to pay back 14,700 per month plus electricity on top of that. So let's say you'd have to pay about 15,000 per month when you buy a brand new apartment. If you were to buy this as an investment property, the average rental in Rosebank in Johannesburg, look at one bedrooms, it's 9,000 for like 30 square meters. The other one is 35 square meters. This one is 36 square meters, 7.3 thousand. Can you see that the rental in the area is half what you'd have to pay back? So if you buy a property on credit in Rosebank, Johannesburg, and you want to rent it out, you'll be making a loss for a significant period of time before you start actually making rental income from that investment. The money has to be, it's only two bedrooms which are priced at what you'd be paying for like a one bedroom on a monthly basis. So on a one bedroom, even this one, okay, this one is 15,000, but it's double the size. It's like almost double the size. So what I'm trying to show is that in property, for new builds, it's pretty hard to make a profit right from the start. You have to buy an old apartment and then in a more dodgy area in order to make yields from rentals. So, this is just an example. And then what I want to show you is that if you go on sites like flipper.com and you go to like, if you do Shopify, you can do Shopify. If you want AdSense sites, you can do AdSense. Let's just look at blog for now. We'll look at blog and we look at blog, and what you'll see is you'll start seeing these types of blogs. So this one is $12,000 and it makes 2,400 per month. So basically 2,400 per month times 12 makes more than this 12,000 US dollars. So you basically, and it's a 12-year-old site. You basically have to inquire, get access to the site, find out why the seller is selling it. But if you can find an old website, older than 2 years, that has consistent profit, you can be able to pay off the website within 1 or 2 years of buying it and become profitable thereafter, which is much quicker than investing in properties. And it's much cheaper to get into this market than it is to get into the property market. Even though more valuable sites are more expensive. Yeah, so like this one is overpriced, for example. It's like a 3.6 times multiple. But this price is not necessarily what you'd pay. It's the asking price. You can negotiate down based on your own experience. Take this one, for example. This one is also a bit overpriced, but what I like to look at in terms of websites is to look for websites where there's a growth opportunity in terms of content they haven't created yet, in terms of all content that can be updated, in terms of backlinks that can be built to the site to increase its authority, in terms of monetization. Sometimes, like this site is monetized with ads, but it would be better monetized with affiliate deals. So those are the types of things I look for before buying a site. If there is a gap in any of these, then it's worth looking at starting to negotiate the price down closer to a multiple of 2 or under. Anything under a multiple of 2 is a good deal, according to me. So yeah, like look at this. So this person has built a US county map. So it's a map of all US counties. And then it makes $100 per month. It's only asking for 1,350. So if I wanted to buy this site, I would look at, okay, this site already has maps of all the different counties. What else could work with a site that gives you maps? You could include like tour guides of things to do in those different counties, and then have travel affiliate deals like flight packs or tourism packs, that kind of stuff. Or you can tap into the real estate market, um, and find affiliate deals within that space. As you can see on this site, there's different sites at different price levels. For me, the most important thing is the age, the profit, and then you inquire with the site to find out if the traffic is stable or not. When the traffic is stable for a few years and it's been making consistent profit, that is a good site. Then your next phase is negotiating the asking price. For me, a 2.7 multiple is a bit high. I always aim for as close to less than 2. It's going to be between 1 and 2 times profit multiple where I usually buy. But the closer to 1, the better. The closer to 1, the better. You can filter by price as well in these kind of sites. You can see there's different prices for different sites, different niches. And I recently bought a site here for the price of an apartment in like Pretoria. And within 6 months, it's basically paid itself back. So from the 6 month point onwards, it's just profit. And you will never find that in things like property investment. The only difference between this and property is that you need to learn how to run websites. So you need to learn content marketing, you need to learn SEO, and you can learn all these things within a year or faster if you're like a fast learner. There's free SEO courses online. Once you do like free SEO course, all you have to do is search free SEO course and do one of the 3 top courses that show up. There's going to be HubSpot, there's going to be SEMrush, there's going to be the Coursera, or you can do that the Google digital marketing course. You upskill yourself, you learn how to grow websites, learn how to analyze websites, then you learn website monetization, affiliate ads, those sort of things. And then like within a year, you could be pretty good at finding these sorts of opportunities, which in my opinion are much more profitable and easier than things like property or like real life brick and mortar businesses, because most of these don't actually handle real products. It's just information and affiliate links. But you can do Shopify and e-commerce as well. I just looked at blogs for the example in this video.